get out of the most overvalued currencies and into more fairly or better valued currencies. Or better yet, get out of currencies completely and own real money, own gold and silver. Most of the additional government is being paid for by printing more money. So instead of raising our taxes and taking our money, they're printing more money and taking our purchasing power. And so Americans are paying for the cost of government through a higher cost of living. So because the government is printing up so much money and spending it or giving it to other people to spend, prices go up. And so now everybody can afford to buy less because the prices of everything they're buying are so much higher. And that represents a tax. Because if prices are higher and you can afford less stuff, the stuff that you can no longer afford was basically taxed away from you. Well, to stop creating money, stop causing inflation. But that would result in a lot of other short-term problems like stock prices crashing, bond prices crashing, real estate prices crashing, financial crisis, bankruptcies, defaults. A lot of really bad things are going to happen if the Fed stops creating inflation. But of course, even worse things are going to happen if they keep creating inflation. So there's really no easy way out of it. There's just a bad way and a worse way. And unfortunately, we're choosing the worst way. I'm warning today about a much bigger financial crisis, currency crisis that is waiting for us here. And you can call me Dr. Doom if you want, because I am forecasting some economic doom for a lot of people, but it's not because I just want to make that forecast. That's what's there. That's what I see because I understand the errors that the central banks and governments are making, and I know what the ramifications are. Just like I knew that when Greenspan was in charge, inflating the housing bubble. But the powers that be did not. They thought we were enjoying genuine prosperity, and I knew they were wrong. And the same thing is happening again. This is an artificial bubble inflated by central banks, the Fed in particular. And, the crisis that we have, laid the foundation for is now much greater than the one back then. But of course, the same people who were oblivious to the coming 2008 financial crisis are oblivious to this one. Even though it's even bigger. But the causes are the same. It's the same bad policies that have caused the problems that have sown the seeds for the next crisis. I think the balls are already in motion because, we had this big increase in consumer prices in 2021. We get the official CPI numbers, I think, on Wednesday here, but it's going to show that prices were up 7%, maybe a little bit more during 2021. That would be the highest rate, I think, since 1982-ish. But, if we still measured prices the way we measured them in 1982, we would have, reported about a 15% increase in consumer prices, which would make it worse than any individual year during the 1970s or 1980. So this was a horrible year of inflation, and I think this is, really the beginning of the end, because now the Fed can no longer justify 0% interest rates and quantitative easing. It needs to raise interest rates, and it's now talking about raising interest rates, and it may in fact raise them. We'll see. It may not just talk, it may actually do it. But the problem is, even the rate hikes they're talking about are too small and too late to make a difference. Because the Fed is talking about raising interest rates. Well, we got 7% inflation. You can't raise rates to 1 or 2%. Rates need to be higher than the rate of inflation if you want to slow the rate of inflation. So interest rates need to go, 10%. But of course, we can't even get near 10%. We can't even get to 5%. We have so much debt because of all the past money printing and all the stimulus of the Fed. They have created a situation where it's impossible to fight inflation, and so they won't do it. And that's going to be the seeds of the next crisis, because as the Fed is, tightening up on its monetary policy to make it less loose, right? We're not going to have tight money. We're just going to have money that's less loose than it was before. The problem is less loose is not enough to sustain the asset bubbles, in a lot of these financial assets. So we get a crash, but it's not tight enough to actually bend the inflation curve. And so inflation is going to keep getting worse, even as the Fed is hiking rates supposedly to fight it. That's going to lead to stagflation. That's ultimately going to cause the Fed to reverse course and start easing again, even though inflation will be worse than when it started its tightening campaign. And somewhere along the way, the markets are going to wake up to this reality, and the dollar, or the bottom rather, is going to drop out of the dollar, and then we're going to have a currency crisis that will morph into a sovereign death crisis, and then it's all over. Then we have a real collapse, because then the Fed has to let interest rates go way up, and everything comes crashing down in a much more spectacular way than '08, except nobody gets bailed out. Everybody has to suffer the losses in their entirety, and they'll be much bigger. Or they don't have the guts to do that, and they just keep printing money anyway, and they print the dollar into oblivion, and we have hyperinflation, which of course would be even worse. If you recognize what is going to happen and understand what's already happened, you can position yourself on a personal level to profit from what's going to unfold. I mean, there's always going to be winners and losers. I mean, in every economic crisis, there are winners. I mean, there are a lot of losers, and the losers, there's a lot of stories about the losers. It's very high profile, but fortunes are made during those times. I mean, a lot of people made fortunes during the Great Depression. I mean, they were able to buy up assets on the cheap that they never would have been able to buy but for those circumstances. And that later ended up being, a springboard to incredible wealth. So I think there's going to be a lot of opportunity for people to get rich while a lot of other people are going broke, right? So the question is, how do you avoid going broke and stay rich if you're already rich, or maybe get richer, or maybe get rich if you're not rich now? I mean, how can you take advantage of the circumstances? And I think what you need to do is you need to understand all of the artificially inflated assets and get out of those. So don't own the stuff that's going to crash, but own the things that are going to rise in value when all that stuff crashes. Get out of the most overvalued currencies and into more fairly or better valued currencies. Or better yet, get out of currencies completely and own real money, own gold and silver. But own assets in countries, emerging markets, whose economies will benefit from what's about to happen. Certain asset classes and businesses will thrive in this environment. Because I think if the dollar crashes, the way I believe, Americans are going to substantially reduce their spending.